Look, Maria, we've all probably got loads of things in our head that we shouldn't share, but you do feel that maybe the deadline for tariffs is one that should be verbalised. But nonetheless, let's get to the MLIV question. What odds are markets, let's talk about equity markets, pricing in for a US-China trade deal in 2019?
Yeah, I think it's a great way to ask this question. And I mean, our view is that trade deal is not priced in.
Okay.
And trade deal has not been priced in even in the first quarter of the year when we had a strong rally. We think the rally was based, I mean, we think that rally was based on kind of excessive pessimism Q4, and market was readjusting to it. But if you look at valuation of global stocks, when they're trading at kind of average multiples, and you probably can argue they could be lower given where bond yields are, where inflation expectations are. I've spoken to quite a lot of clients. I haven't found many who really committed money to emerging markets. There were some that building positions. There were some that maybe on the margin were putting money to work. But generally, very few people could be persuaded in a kind of in a world where global growth is slowing, trade is maybe curtailed. Not many people really committed to emerging markets. If you look at like valuations of things like Aussie dollar or trade-sensitive currencies, again, very steep discount to fair value. If you look at things like, I mean, even Fed futures, we just talked about Fed pricing. I mean, U.S. economy is not flying high, but it is solid, and we're pricing a recession.
Yeah.
So definitely market is expecting a very sharp disruption in trade. So that to us, yes, risk is two-sided, and we see that with Mexican dealers, that you get a deal, you get a strong pop, but definitely two-sided and maybe skewed on the upside, given where market is pricing.
That's interesting. So you think risks are skewed to the upside. If cash is still on the sidelines, as you say, Maria, and we do get an upside scenario, where do you think that cash is going to be deployed most aggressively?
I mean, we've been fans of U.S. market for a long time, and I do believe that's the market to be. It is a market with highest earnings potential, highest growth outlook. I'm sure we'll talk about it in the program, but growth stocks is a kind of centerpiece of our investment process. So we want to be in growth stocks, and U.S. offers the best opportunities for growth. So that's the market we would like to be in.
Okay, and you don't think they've gotten a little toppy, growth versus value?
Oh, no, absolutely not.
All right, okay, fair enough.